Here are the 5 assets the ultra-wealthy move their money into when the financial system starts breaking apart. Not after the crash, before it. While you're watching the news in panic, they're already positioned, and by the time the dust settles, they're richer than when it started. Here's exactly how they do it, and why each of these assets works when everything else fails. Asset number 1. Gold, the eternal ledger. Go back to the 1920s Weimar Republic. People were literally pushing wheelbarrows full of paper cash down the street just to buy a single loaf of bread. The currency didn't just weaken, it collapsed entirely, became worthless. And this wasn't some ancient historical anomaly. Every single fiat currency in history has eventually lost its purchasing power because politicians can print it out of thin air whenever it's politically convenient. But you cannot print gold. When the Great Depression hit in 1929, the stock market evaporated. Banks permanently shut their doors. Entire fortunes built over decades disappeared in weeks. Paper wealth vanished, but physical gold held its ground. It didn't just survive, it preserved wealth through one of the most devastating economic collapses in modern history. Here's why the ultra-wealthy treat gold differently than most people do. Gold carries zero counterparty risk. That means its value doesn't depend on a government staying solvent, a bank staying open, or a digital network staying online. If the entire banking grid went dark tomorrow, every server, every app, every account, a gold coin sitting in your hand would still be real wealth. No password required, no institution needed, no trust required at all. But here's where it gets even more interesting, and where most people stop thinking too soon. Gold doesn't just protect wealth, it signals something. Every time a central bank, whether it's the Federal Reserve, the European Central Bank, or the People's Bank of China, aggressively expands its balance sheet, gold responds. Not immediately, not in a straight line, but directionally, over time, almost without exception, because gold is the market's way of keeping score. It's the asset that silently tracks how much trust remains in the system. And right now, central banks themselves are buying gold at the fastest pace recorded in over 50 years. Not retail investors, not hedge funds, central banks. The very institutions that print money are stockpiling the one asset that cannot be printed. If that doesn't tell you something about where we are in the monetary cycle, nothing will. That's not just a hedge. That's financial sovereignty and an early warning system built into a single asset. Asset number 2, prime real estate and farmland, the tangible monopoly. Yes, real estate caused the catastrophic 2008 financial crisis. But here's the critical distinction the elite understand that most people miss. It wasn't real estate that caused the crisis. It was leveraged, speculative real estate piled on top of reckless debt. Suburban homes bought with nothing down by people who couldn't afford them, bundled into financial products no one fully understood. That's not what billionaires were buying. While Wall Street was in full meltdown mode in 2008, banks collapsing, hedge funds imploding, trillions of dollars disappearing, the ultra-wealthy were quietly stepping in and buying dirt, agricultural land, debt-free commercial properties, prime locations generating real, consistent cash flow. Why? Because the stock market can crash to zero in theory, but 8 billion people still need somewhere to live. They still need to eat. Those two facts don't change in a recession. They don't change in a depression. They don't change during a pandemic. Real estate pays you to wait. It generates rental income and crop yields regardless of what the Federal Reserve is doing, regardless of what interest rates look like, regardless of market sentiment. It doesn't care about investor psychology. It produces something humans need to physically survive, which makes it almost entirely immune to Wall Street's emotional panic spirals. Asset number 3, fine art, the invisible vault. To understand this one properly, you have to go back to 15th century Florence. The Medici family had built one of the most powerful banking empires in European history. Enormous wealth, enormous influence. But they faced a problem that every ultra-wealthy family eventually faces. How do you protect unimaginable wealth from greedy kings, unstable governments, and crushing taxation? Their answer was brilliant in its simplicity. They locked their wealth into canvas and paint. Today's modern elite do the exact same thing, just with bigger price tags. When a billionaire acquires a $200 million Picasso, they are not decorating a wall. They are executing a financial strategy. They are converting heavily monitored, heavily taxed liquid cash into something portable, discreet, and largely unregulated. During economic depressions, fine art doesn't behave like stocks or bonds. It doesn't crash. It doesn't correlate with interest rates or corporate earnings reports. Its value is driven by one thing: extreme scarcity. There is exactly one original Picasso, one original Basquiat, one original Vermeer. You cannot print more of them. You cannot manufacture supply to meet demand. In a world where central banks can conjure trillions of dollars into existence overnight, genuine scarcity is one of the most powerful forces in finance, and fine art is one of the purest expressions of that scarcity. Asset number 4, the Swiss franc, the Alpine bunker. Most crisis playbooks involve abandoning paper currency entirely, but there is one major century-old exception, and the smart money has known about it for generations. While the rest of the world spent the 20th century destroying their economies through 2 world wars, runaway debt, and cycles of hyperinflation, Switzerland made a different choice. They chose absolute neutrality. They built a localized, deeply conservative banking system tucked into the Alps, insulated from the geopolitical chaos engulfing their neighbors. That history matters enormously. Because of it, the Swiss franc has earned a reputation that no marketing campaign could manufacture. It is treated, effectively, like paper gold. When global financial systems start showing cracks, whether it's a European sovereign debt crisis, a banking contagion, or a global pandemic, trillions of dollars of capital don't just flow toward safety randomly. They flow specifically, almost reflexively, into the Swiss franc. It is the designated safe haven currency of the planet, not by decree, by 200 years of earned trust. Asset number 5, consumer staples, the everyday necessity. Imagine a severe economic depression begins tomorrow. You lose your job. Your portfolio gets cut in half. Credit tightens. Fear spreads. Here's what you immediately cancel: the vacation, the new car, the restaurant dinners, the luxury subscriptions. Here's what you never stop buying: toothpaste, shampoo, toilet paper, soap, basic food. This is the simple, almost boring logic behind defensive investing. Companies like Procter & Gamble and Johnson & Johnson don't depend on economic growth to survive. They don't need a bull market, a booming jobs report, or consumer confidence to be high. They sell products that humans buy out of habit and biological necessity. And those things don't stop during a recession. In the brutal 2008 crash, while financial stocks were being obliterated and tech companies were hemorrhaging value, consumer staple stocks barely moved, not because investors were being irrational, but because the underlying business barely changed. People kept buying toothpaste. They kept washing their hair. The world was in crisis, and Procter & Gamble was still printing steady earnings. Human habits are the most durable economic force on the planet, and consumer staples are the purest financial bet on that durability. The gold for eternity, real estate for cash flow, art for invisibility, the franc for stability, staples for survival, 5 assets, 5 different mechanisms, 1 unified strategy. Don't just survive the crisis, use it. The question isn't whether the next crash is coming. It always does. The question is, which side of it do you want to be on? Now, we want to hear from you. Which of these 5 assets do you think holds up best in today's environment? And more importantly, is there a 6th asset we missed, something you personally trust when markets start breaking down? Bitcoin, timber, water rights. Drop it in the comments below, because the smartest answers might just end up in our next video.